moving on to the crypto space. The crypto space has been impacting the stock markets a lot as it grows bigger and bigger. And there was a crash in November. Bitcoin was touched as high as 126,000 US dollars, and it went back to as low as, I believe, 82,000 US dollars or so. And now it is back to in the 90s. So that did hurt the sentiment, especially it happened at a time when there was a discussion about whether the Fed will cut rates in December or not. That was one of the reasons also which precipitated the Bitcoin decline, and that did not help the Bitcoin value as such. But those were some of the reasons. Another reason that we saw for the Bitcoin decline was that there is a company called MicroStrategy. MSTR is one of the largest, second or third largest holder of Bitcoin in the world, and they are leveraged, which means they are buying, they have bought Bitcoin in the past by issuing debt and promising dividends on preferred stock. So now they have to pay those interest and dividends with which they have bought Bitcoin, and that company started trading at a valuation lower than its Bitcoin holdings. So the market speculation was that they will have to liquidate their Bitcoin holdings, and that's why people were selling in anticipation of that Bitcoin holdings from MicroStrategy coming into the market at a large scale. That did not happen, and the chances of that happening for another 21 months are also very low because they were able to issue equity and fund interest and dividends for the next 21 months. So 21 months is large enough in this day and age, I think. And so a large amount of Bitcoin hitting the markets is a low probability as of now. Retail, another thing was because of this scare, there was a lot of retail fund outflows from Bitcoin ETFs. So that hurt the Bitcoin sentiment as well. And so put all of this together and you can see on the right-hand side, there was a straight crash in Bitcoin valuations. And that also impacted the stock markets because people thought stock markets will follow. Now, so what actually happened during the Bitcoin crash? Who were the buyers and who were the sellers? And that's how we are trying to evaluate what could happen in the future. The Bitcoin wallets, and these are publicly available. You can check this information on multiple public websites because Bitcoin holdings are all public. Bitcoin wallets which hold more than 1,000 Bitcoins, which is approximately $91. So individuals or institutions that hold more than $91 million worth of Bitcoin, you see the green chart over there, they were the net buyers in this decline, which means there was a transfer of wealth or Bitcoin from panic-driven individual retail buyers to retail sellers, to the buyers, and the buyers were mostly Bitcoin whales, as we call them. And so anybody holding more than 1,000 Bitcoins or $91 million worth of Bitcoin, they were the primary buyers during this crash. And so, which means that Bitcoin is moving away from a little bit of retail holding to more institutional holding, which provides stability, which will help future declines because retail fund flows will not be able to impact Bitcoin prices as much. So that's a positive. And it also shows that large holders of Bitcoin were more convinced about the value of Bitcoin, and they continue to add to their positions. And that's why this is smart money taking over Bitcoins from more of a retail-oriented investors. And so that's why this is a good thing. And we do feel that that will provide a lot of support to Bitcoin going into the future. So